Hi, Tim Bigham back again this week for Traders Exclusive, and let's call it Twitter Thursday. Literally almost as I speak here, Twitter actually came public. First trade, 45.10, well above the $26 IPO price. So instantly just about 73%, pop in the stock here. So absolutely a stock I would avoid at these levels here. And I think it signals a little bit of that frothiness that we're starting to see in the market kind of bubble through. Certainly the S&Ps, Dow made a all-time high yesterday. S&Ps almost did, although NASDAQ had a down day. The big Momo stocks, the Teslas, the Googles, the Green Mountains of the world, certainly Netflix, all had rough days, Amazon as well. We also saw the transports, which we talked about last week with FedEx, had a very rough day as oil finally popped up. Transports got hammered, actually took a little bit of profit on those FedEx puts we had kind of talked about last week. So I think it's getting a little bit sloppy up here. A lot of divergences, got the VIX below 13, so some complacency certainly setting in here. You're seeing bullish advisors to bearish reaching levels that have in the past signal, over exuberance and short-term market tops, to say the least. So I'm looking for a pullback and looking for it to happen actually pretty soon here. I think, this kind of complacency that the Fed will just keep engineering a straight-up rally forever. At some point, valuations will matter, and I think this may be that point. Earnings have come in lackluster. Revenues certainly a little bit light. Qualcomm's numbers last night certainly were nothing to write home about, and their forward guidance was certainly something to put a damper on the stock. So looking to actually just outright buy some puts out in January here, and then hedge by selling further out of the money puts on a weekly basis. So using the SPY, buying that 174 strike and then selling 173s and 172s against it shorter term, putting on put diagonals and just waiting for maybe a 1 or 2 day pullback of some magnitude here where that spread will not only pop on a directional play but also on a volatility play. I like to be long vol here with the VIX somewhere around 12.5 to 13. That's also getting down to the lowest levels we've seen since August. So everything just a little too quiet, a little too divergent, and certainly volumes have been abysmal to say the least here. So I think we need a pullback actually for this market to head higher. I think it'll be healthy, and I think the Twitter IPO may signal the way it came out that things have gotten a little bit out of hand where everyone is just saying up, up and away. There can be no problems, even though those problems still exist. So until next week, this is Tim Bigham. As always, especially in this market environment, keep those position sizes in place and those stops going. Take care.